What is up, guys? Welcome back to Broke Man Finance, a channel where we try to help the normal blue collar everyday individual decide where to put that hard-earned money. Most of us don't have thousands or even hundreds of dollars to just invest every single week, so those decisions are a really big deal. And if they're a big deal to you, then I hope you decide to stick with us by subscribing and liking these videos. Let's go. Today I'm going to go over 3 stocks that has an enormous amount of growth potential in front of them, and I can't quit buying it because they keep making me more and more money every single week. I've talked about these on the channel before, and if you would have bought way back when, you would have been up so much right now on your money. But I know I talk about a lot of stocks, but these 3 are 3 of my favorites, and they continue to evolve the business and they continue to innovate, making me believe that they're going to continue to be profitable in the future, and that share price is going to continue to tick upwards. So if you like money and you like making money, then stick with me through this video while I give you 3 stocks that are going to do really well in 2021. And without further ado, let's take a look at our very first stock, and that is Axon Enterprises, ticker symbol AAXN. Axon Enterprise Incorporated is a Scottsdale, Arizona-based company which develops technology and weapons products for military, law enforcement, and civilians. They are best known for the Taser and their law enforcement applications. They are also the main player when it comes to body-worn cameras for police and the digital evidence retention and security. Basically, that means keeping those videos that police have as evidence secured. Currently, Axon is trading for $125. Over the past 5 years, Axon is up 635%. I'll give you a second to do the math on that. Their share price jumped up 27% in November after posting an incredible earnings report. Revenue rose 27% to $166.4 million, and bookings grew by 56%, a promising sign for future revenue growth. The annual recurring revenue is also up, which comes from the company's subscription cloud-based products like Axon Evidence and Axon Records. That rose 44% to $204 million. Those subscription cloud services is what police departments sign a contract with whenever they go with Axon body-worn cameras. They sign up for these subscription services so they can get all of the resources Axon has when it comes to evidence retention and their body cameras. On the bottom line, adjusted earnings per share rose from 28 cents to 40 cents, which was well ahead of estimates of 20 cents. International revenue growth was also strong, rising 43% to $23 million. They have began to take their company global and are trying to put their tools on police departments and police officers all across the world. Plus, with his Biden victory, he has promised a lot of criminal justice reform. Don't know what that looks like, but for a company like Axon, people have assumed that the Biden administration is going to try to throw a lot of money at police department accountability and officer less lethal tools. So the one company that stands to benefit more than anyone else is Axon. Analysts continue to write Axon off as being overvalued. They've been saying this for a while now, and Axon continues to prove them wrong by posting great earnings reports. They give innovative products. They're evolving with the times. Civil disorder is not going to go anywhere. Plus, and the one thing I really like about Axon and their numbers is the fact they have 0 debt. They're not in debt to anybody. Civil disorder is not going anywhere anytime soon. Let's be real. And with the police numbers dwindling, less and less people want to be police, and police departments are now becoming defunded, Axon is going to have to be able to step up to the plate to provide the fewer numbers with more tools. Axon is the big player in this space. And with innovation comes profits, and Axon is going to continue to bring the most innovative products to the hands of military, law enforcement, and civilians across the country. Number 2 on the list is Walmart. Ticker symbol WMT, but I have a feeling that Walmart doesn't really need an introduction. Over the past 5 years, Walmart has averaged around 30% of growth per year. And from the sounds of it, they have no intentions of slowing down anytime soon. Walmart is profitable, we all know that, but it's everything else they have going on that gives them a lot more profit potential. Currently, Walmart is trading for $146 and is the only stock on this list with a dividend that comes up to 1.48% or $2.16 annually, giving you a 50-cent per quarter dividend. Walmart also has increased that dividend for 47 years. That's longer than a lot of us have even been alive. Not to make you feel old. Walmart said this past Thursday it would partner with TikTok to sell items seen on a live stream by creators and influencers featuring the retailer's fashion merchandise. Walmart said viewers on TikTok, which reaches 100 million US users a month by the way, can shop for fashion items featured in content from popular creators without having to leave the platform. It gives us a new way to engage with users and reach potential new customers, William White, Walmart's U.S. Chief Marketing Officer, wrote in a recent blog post. As far as influencers go, we're talking about Kendall and Kylie Jenner level influencers. Plug Power is expanding their EV operation into Walmart, and Walmart is also rolling out an autonomous driving program, and they are still wanting to compete with Amazon with same-day delivery. The e-commerce space is too big to be ignored, but Walmart could do really well if they could get that same-day delivery service going, especially with the grocery side. If they could do same-day grocery delivery, that would be phenomenal for the company. And they're doing all of this after coming off some of the most profitable months the company's ever had from the Roni catastrophe. Walmart is a company that is still trying to evolve and change the retail space even more than they already have. In the next 5 years, there's no reason, if the right moves are made, if they do the right things and things are as successful as a lot of people believe, there's no reason Walmart couldn't hit $500 levels. Number 3 on the list has been one of my personal favorites for a little while now. I even recently spoke about them, and their share price has continued to drive upward. The company that I'm talking about is CHWY. Ticker symbol CHWY. Whenever I first started telling people to buy CHWY, it was trading for around $50. Even then I thought I was a little late to the game, but now and very recently they have jumped up significantly, and they are currently trading for around $100 at the time of this filming. CHWY has only been listed since June of last year, 6/19, and they are already up 360%. But why do I think CHWY can continue to grow? Well, it's because of the telehealth services that they're trying to get rolled out. They've already been testing it for a while, but their ability to connect vets with pet owners at very inconvenient times. Imagine needing to see a vet on a Friday evening. Let's say it's 8 o'clock at night. Your beloved pet is just getting deathly sick, but you're sitting there thinking that you're going to have to wait until Monday morning before you can see a vet, unless you take it through some emergency vet. That's just ridiculously expensive. But we'll go and we'll pay it because we love our pets. But if you are a member of the subscription service offered by CHWY, you would be able to see a vet at those extended hours, and they're actually trying to figure out a way to make it more 24/7. As a pet owner myself, I would probably sign up for the subscription service. I would find something to order on a monthly basis just for that added benefit. But if you don't want a subscription fee, don't fret. I only say that because I have several dogs, and I feel like there's always a reason for me to go to the vet. Pet owners who aren't a part of that subscription service could still get access to that service. It would just come along with an additional fee. I think this is a genius move by CHWY. If you're a pet owner and your pet gets sick, you understand, you get that how invaluable this service could be. And if it's invaluable and very convenient for pet owners, because that's where value is, then that means that CHWY stands to make a lot of profit off this service. More and more people are becoming pet owners. Pet adoptions are through the roof, and young adults are spending more and more money on pet products than ever, which, by the way, CHWY is adding more of. What can I say? We love our pets. I'll say it again, and it's one of my favorite sayings, but there is value in convenience. And when you combine your pets and convenience, you're creating a recipe for a lot of money. And that alone should get CHWY investors very excited about the future. But remember, I am not a financial advisor. I'm just giving my point of view on things to help you make good decisions with your money and your investments. So make sure, as always, you do your due diligence, because maybe you find something that I may have missed. And if you do, make sure to leave me a comment in the comment section below. I'd love to hear what I did miss. You're not going to hurt my feelings. I'm a big boy. But as always, I hope your stocks stay green. I hope you stay safe, and I hope everyone has a Merry Christmas.